Joining me for more analysis, it's Peter Andersen here from Andersen Capital Management. A very good day to you, Peter. Thank you for your time today. Let's maybe get stuck in with that data that I just mentioned there. So the US economy rebounding faster than previously estimated in the third quarter. We've still got all of this macro data pointing to a tight labour market. What's your take?
Well, if we look at this so closely as we naturally do, I do think we should expect to see various movements up and down, good news, bad news, GDP wise. And I expect that coming out of this tremendous period that we just have emerged from, the worldwide pandemic. So for us to expect, I would love it to be a straight line recovery, but I think we're looking a little bit too closely. Now, I know we have to look at the data, but I think we have to take it and interpret it as something that is going to be jagged on the way back. It's not going to be a smooth increasing line, and I think that has been demonstrated by today's data.
Okay, let's look further into the future then, into 2023, which is just around the corner now, isn't it? How do we avoid a US recession?
Well, I think what is going to happen is the Feds, now remember, the Fed had just started raising rates less than a year ago, March. So this coming March, it will be a one-year anniversary. That is about the time that most economists say it takes to have an impact, to see the results of rising rates. So we are going to be coming in the end of this first quarter. What I expect is we will start to see even more results from the early hikes. The Fed has also said that they're going to slow down a bit, but maybe extend the period. So I think that will mesh perfectly with the timing of the results from the early hikes. And I also think that means we might actually avoid a recession if the timing is right. I mean, it's all about the timing of all these complicated factors, right? But if we do get this right, I do think there is a possibility that we will avoid a recession, yes.
Okay, timing really is key from the sounds of it all. I want to talk about crypto because this whole FTX case, it has got us all completely gripped. But what does it mean for the actual cryptocurrency industry? Is it tarnished forever? What's the future here,
Yes. Peter? Many things, I think, and none of them is positive. I think they're all negative results. Number one, let's just think about the history of the narrative of crypto. When it first became popular, investors were saying it is a storage of value. When that didn't work, they pivoted to it is an inflation hedge. When that didn't work, they started talking about how independent it is and how visible and transparent the transactions are. Now, the irony of all that is with FTX, no one knows where the coins went. So for an asset class that has boasted it is the most transparent, hack-proof asset out there in terms of our currency, we are seeing that we don't know where billions of value has gone. So I do think it's a bit ironic that that has happened, and I wonder what the next attractive feature they will cook up in terms of why crypto is healthy and it's a viable asset. So I do think what's going to happen is the faith that this has been based on and the whole emotional balance of this is going to get totally out of whack, and I do predict that many of the miners, we have seen some of the miners file for bankruptcy in less than a year of their IPOs. I do think we will see more of that, and I'm predicting for 2023 it's probably going to be the worst year ever for crypto and crypto-related issuers.
All right, well, certainly never a dull moment in the world of cryptocurrencies. Peter Andersen, thank you so much indeed from Andersen Capital Management here on Reuters Today. Thank you very much.